Hi, I'm Wayne.
And I'm Hazel.
And welcome to episode 9 of the Just Covered podcast. If you haven't listened before, we cover views and opinions of advisors in the intermediary space where they create success with their customers.
And today we are joined by Dale North, Manager Director of Pure Protect and Stonebridge Protect, who are specialist protection advisors who will deal with referrals from mortgage advisors and wealth advisors across the market. So welcome, Dale.
Thank you. Good to be here.
And yeah, it's nice to have you. So can you tell us what got you into being the Managing Director at Pure Protect and Stonebridge Protect?
So going back sort of 15, 16 years ago, I was actually an IFA in the industry, still doing protection, but doing a lot of wealth and pensions as well. Just from that, I found I had a real passion for protection over and above the other products. And I saw maybe a bit of a gap in the market back then because now we have consumer duty coming in a few weeks' time, which is very, very important and pronounced in the industry. But back then, a lot of people weren't really doing very much protection, saw it sometimes as a product of lesser importance compared to wealth and pensions. So we recognised that, and then we started working with a couple of large contracts initially to look at reviewing their existing back books on protection to ensure products that they had sold maybe years before were still the most suitable. And that was a real big point for us because in one of the contracts that we had, we were reviewing around 4,000 clients, and we found several people that had critical illnesses and not claimed through those periods. So we were reviewing these clients and finding that they'd had illnesses that were claimable, and they hadn't claimed for several different reasons. So we cost Legal and General and some other insurers quite a lot of money back in 2011 and 2012, which I'm quite proud of, to be honest.
Yeah, quite right. I had a case like that when I was advising. The lady came in to see me for a remortgage, and turned out she actually could have claimed on her policy, and that was an L&G policy as well. So I think I cost them money when I was an advisor.
It's what we're in the industry for, though, isn't it? We're talking about, you mentioned it already, consumer duty, putting the customer at the centre of what we do, making sure they've got the right outcomes, all those types of things. It's just evidence, isn't it? As we'll talk about.
And I think that's why the review processes are so important these days, because people do get advised on these products, they buy these products, they put them in a drawer, they put them in an email account these days, and they forget about them. And then when they go through some of these tough times, they don't think about what protection they might have bought. Even with the added benefits of in products as well, there's things in there that can support people to get back to work sooner and to help their loved ones. So that's why reviews, I think, are vitally important. And us in our businesses, we try to review all of our clients at least once a year. I think since the COVID period, and now with a lot of the mortgage changes going on, people's circumstances change a lot quicker now than they used to. So it's really important to keep going back over your client, and not just for us, but for mortgage brokers as well, to ensure that those products that you advised maybe 2, 3, 4, 5 years ago are still the most suitable fit for the clients now. And
that's really important, isn't it? How does that resonate, the prospect of having a review with clients near and in past and in the future?
So I think going back 10 years ago, IFAs were used to doing it with investments and with pensions, but it was fairly unheard of, I think, in protection and mortgage industries. But now with annual reviews being provided by a lot of insurers, and certainly with our clients, they've been very, very used to it. And sometimes they're coming back to us even before the 12-month period and saying, when can we book in to do our review? So clients certainly get a lot of value out of it. And those clients I talked about earlier that didn't claim on their policies, had they had more and more reviews back then they might have had their payments from the insurers much sooner, and that could have made a difference to them and their family much sooner as well.
So when you mentioned obviously review, is that something that you signpost with the clients then when you've done the first appointment with them? Do you tell them this is going to be an ongoing relationship, or how do you tee that up?
We do. We explain to clients that the reviews are going to be conducted once a year, and also that we are here to help and support as well. I mean, obviously, with us being in an industry for quite a long time now, unfortunately, we do see a lot of claims on all of our products. So they need to know that not only is the insurer there for their support when things like that happen, that we're there as well. So I think, again, under consumer duty, I think all people that are selling protection products in the industry or advising on protection products need to factor that in as well, that you need to give that extra level of support to your clients, because frankly, it's the right thing to do, isn't it?
Mm. And what would you say? I mean, some advisors might be listening to that and thinking, well, I can't fit in a review. You know, I'm doing my mortgages, especially at the minute in the mortgage industry, things are notoriously time consuming. So what would be your response to that?
I mean, mortgage brokers have had a really, really tough time, haven't they, with changes with their products in the last few years. I mean, I would never want to be a mortgage broker. It seems like absolute hell to me. But it's very, very difficult to find the time for a mortgage broker to do things holistically now. And that's not going to get any easier because we're quite heavily focused on consumer duty around protection, aren't we? But it's affecting a lot of other products as well, especially mortgages. So the average mortgage broker, I mean, some of our mortgage brokers are doing 30, 40 mortgages a month, and they have absolutely no way they'll be able to find the time to do protection. So we do bring in a lot of referral partners due to time. But time is something that is shrinking for them, really, and we're getting ever closer. I think technology is certainly going to help. That there will be platforms that will be built, I can see in the next 3 or 4 years, that make the protection journey far, far simpler for mortgage brokers. But it's those conversations you're having with the clients and getting to know what really is important to them about a protection product. It's having the time to do those that quite simply some people won't have the time to do. So it's, for some people in the industry, it's making a decision. Do I continue letting my clients down, not giving them the time that they need for these products, or do I look at either bringing in a specialist or referring on to a partner like us?
Definitely. And what was it that, you mentioned right at the start, that was a passion of yours always, even when you were you were on the other side in the IFA and that initial kind of the other product.
Yeah.
What was it that drew you to that protection conversation that made you so passionate about it?
I think for me, it's just it's simplicity and it's common sense that the hierarchy of needs of financial products, protection should be first. You can't invest your money into ISAs if you lost your job and you due to ill health, or you've got a critical illness, or your partner's passed away, whatever it may be. I think that for all IFAs, really, that should be the most important part of any financial planning, is to deal with protection first. And quite often we get clients come to us through different sources about private medical, which we do a reasonable amount of. But really, private medical is a product that I think would sit at the end of you've got your life insurance and your income protection, because the NHS is fantastic. It does a great job. We can rely on it to a certain extent. I think it's a luxury to have private medical. It's great to have, but income protection certainly always come before that.
And back in the day, it was always that, wasn't it? Protection, certainly income protection, was the foundation of all those other needs.
It was.
And of course, you mentioned the consumer duty element you were talking about of doing protection first, and that could be taking the customers off the rails for those other dreams and aspirations they've got for their investments and their pensions, is actually mentioned as a cross-cutting rule to pursue their financial objectives. So it's something that you're obviously taking, and it's top of mind as something you do every day. I'm interested, how have you got to where you've got to, and what changes, if any, have you had to do in analysing your processes and stuff to obviously be in line with consumer duty coming in?
Yes, I think for us, I mean, it's taken many years to get the trust of the industry, and for people to know that for us as an organisation, we're not going to take their referral client and then go and offer them a different product or something like that. So it's taken I'd say 5 or 6 years really to be really established for us and to show a good track record of what we do. In terms of feedback we give to introducers as well, we have our own referral system in-house. So advisors can very simply click into our system, send a lead through, including details, selecting which of our advisors they want to use. And they get real-time feedback coming through the system, but into their emails as well. That's meant that they have the confidence then to know that what we're doing is right and to continue to refer. But in terms of our processes, we have had some internal technology that we've developed that we use very early in the process to try and establish as much about the client's health and lifestyle as we possibly can, sometimes before we've even done a fact find with the client. Because that means the more knowledge that we have as an advisor, we can go in and we can more accurately advise a client. So a lot of the time, mortgage advisors won't have the time to do that, won't have time to do a full fact find. They'll maybe go into an application with an insurer and realise after maybe 7 or 8 questions that maybe that insurer isn't the most suitable insurer for them, and having to revert back out. It's all taking their time, it's all taking the client's time. So again, as much done in the process as you can as early as possible is much better.
And you've mentioned there, obviously, you provide the advisors with some great feedback. That real-time feedback, I'm sure, is really valuable to them, especially if they've still got waiting for that mortgage to complete, or, seeing that customer through a wealth management process. I guess that's really great, because if they're touching base, they can know everything that's happening.
Correct.
But what would be your ask of them? So I guess if they're referring into you, some advisors might think, well, I'm not wanting to sell this, I'll just refer it. But that doesn't mean that they have no work to do, I'm sure. What advice would you give an advisor on that side?
And we have to be very careful with Consumer Duty coming around that our business development team work very hard to show that the way that leads should be referred across from introducers. It's not just a tick boxing exercise to say, well, I'm not going to do protection on this. I'm going to tick a button and send a lead over and let them deal with it. That's not doing your duty under Consumer Duty. You've got to ensure as an introducing firm, you've very briefly explained what the products are and the importance of them in relation to what financial products you're arranging or reviewing. And under GDPR as well, they've got to ensure that the client is fully aware of who is going to be calling and why we're going to be calling. Our conversion rate sits around 65%. And that's due to a lot of the referral partners having good training from our team to ensure that it's good customer outcomes coming out the back end.
I'm talking about those outcomes, with the duty coming in, that evidence of MI is going to have to go up top, isn't it? Of the organisation, analysis of that, perhaps changing plans, all that type of thing. So if I'm an advisor looking at my business now and I'm thinking about getting ready for Consumer Duty, wherever I am on my journey, what MI should I be looking at in terms of evidencing I'm putting the customer at the centre of what I'm doing, I'm making sure I'm avoiding those foreseeable harm, all that type of thing? What should I be looking at?
I think the first thing to do really is to look back at maybe what they've done over the last 12 months, because Consumer Duty isn't really changing anything, or it shouldn't really be changing anything for a really strong advisor with a lot of time in the market. They're all things that we should have been doing for many, many years, but some people haven't due to times. This is a bit more of a rule that's coming in, but I think that's the first thing to do is look back and see what have they been doing with the clients. If they've been doing 20, 30 mortgages a month and maybe doing one or two protection products, it's clear and evident that they've not done enough work with that client to explain the products and ensure that they're fully advised. What we're all aiming for really, and we all know there are several networks out there now that are mandating protection advice. It has to be done in the right way, but I think it is the right line to take now, because if we don't take a firm hand, we're still going to have clients going through the process without having any advice whatsoever, which is just simply wrong.
Yeah, and it sounds to me sort of two key elements there. You've mentioned evidence, obviously, but crucially, proactivity. So looking at the difference between that and TCF is looking, right, okay, what have I got here? Where's the pathway? What's the process? And what's going to knock the client off track? And what have I got to do to make sure my process is right to ensure that doesn't happen and be able to show it to an external party?
And in terms of recording through our referral systems, there's always evidence within there of when clients have been referred across. It's all time-stamped. The outcomes are on there as well. So as far as their duty, really, if they've explained the protection products to their clients and they've referred it across, it's then down to us to get the advice across to the client and get it over the line. But that's where their responsibility will end through that period, really. But what they have to also bear in mind is when they're doing product switches again in the future, it's important that we go over these conversations again, because a lot of people now are looking at extending their mortgage terms because the prices of mortgages, obviously, in the last 12 months has gone through the roof. People's circumstances now are vastly different in terms of jobs, income. So it's very important we're doing more and more of these reviews going forward.
And how do you ensure, particularly on the back of, say, a PT for a mortgage broker, how do you ensure that the referral is set up properly on the back of that? Do you get quite sort of intertwined in terms of how to approach it?
So it is more difficult, I think, that when, say, you've got somebody that's doing a purchase, I think they're more likely to take instruction from the mortgage broker more simply than if it's a PT. But I think it's explaining to the client your duty as a mortgage broker or as a protection advisor to say, look, if I'm not going to advise you accordingly, I'm not doing my job right. We've got to ensure that the products that you've got from years past are still suitable, and if they're not, I'll take that as my responsibility and our fault if something goes wrong.
So it's confidence and professionalism and having the belief to convey that to the client?
It is, yeah, it is. And I think we have to be careful as well, because if we look at network figures, most of the protection that's sold through networks is mortgage protection to cover that debt that somebody's arranging. If you look at the amount of people that actually use their critical illness payments or even death payment from mortgage term insurance to repay the mortgage, it's way less than 10%. So What does that tell us? It tells us there's a massive void there. It's not really good enough to just have mortgage cover. You need to have cover, especially when you've got children and families. It's important to have cover and income coming in up until at least those children are dependent. Because otherwise, what happens? We've all heard it. You get your mortgage repaid. It might be 500,000, 100,000, £1 million, whatever it may be. But that mortgage is repaid. You've then got a massive problem of where you're going to find this other 80% of income that you've lost from. So it's very, very important for all advisors going forward to do everything holistically. If you hold a mortgage and protection license, you can't just arrange a mortgage protection policy to cover that mortgage you've arranged. You've got to look at all the other elements in there as well.
Cost of living's made that, magnified it, hasn't it?
It has, but I think what's been good for our industry is certainly lapse rates have been much, much lower in the last 2 or 3 years when we're hitting these bumps in the road. I think that one thing that COVID has done is taught people that we're not invincible and these products are very important. And I think that the publications and the claim stats that are coming out from all insurers now are giving the consumer a lot more confidence going forward to know that they've got a good product that's doing the right thing.
Yeah, I mean, when you look at our claim stats from last year, I think it was something, was it 48 claims per day we paid out, and that's just legal in general. So that's only us. So if that's 48 claims per day from legal in general, imagine by the time you add all the other big insurers in as well, that's a scary amount of people who wake up in the morning and their life has completely changed.
Yeah.
Like you can see 48 and think that's just a stat, but actually that is 48 individuals whose lives have changed in some horrific way and have had to rely on that financial kind of extra little boost as such, and you just hope it was the full package, don't you? Because as you said, if it was life cover but then it's got no family income benefit, then has it really secured them as best as it could have? But
so we, and she won't mind me mentioning this, we've got a client of ours that we got referred about a year and a half ago by a mortgage broker that did do protection. But some of our introducers refer us cases that they can't place, or maybe they don't have the insurer on panel for us to help out. So this was a case where we advised the lady on a life and critical illness family income benefit policy, effectively to replace her income up until retirement age within her business. So it took around a year to get the case through, but 4 or 5 weeks after the cover had gone on risk, we got a call from her. And it was about a week after the cover had gone on risk, she got rushed to hospital and had a stroke, completely unrelated to her other medical condition that took such a long time to get through. So you can imagine the conversation we had when we realised that she's now got a really good, a full income coming through now up until retirement age. A complete weight is taken off her shoulders and she can focus on recovery, which thankfully, touch wood, she is recovering really, really well. But that's how important holistic advice is. If we just looked at, and this lady didn't have a mortgage, but mortgage cover or just income protection maybe, then you're not doing the full job. You've got to ensure that you're fully advising everything holistically.
I'm sorry to hear that happened to one of your clients, and I'm glad to hear she's recovering, because it's scary when you hear it like that, isn't it? And what a close call that could have been if that advice hadn't been given in the first place. We've talked quite a bit about, setting up getting the referrals through, making sure it's teed up well, briefly explained. What, from an advisor's point of view, should they know about your advisors? So, if I'm thinking, well, I want to make sure my client is looked after, I'm a qualified mortgage advisor, why wouldn't I be qualified enough to do this? What could you tell us about that?
It's a brilliant point, really, because we're saying to a lot of brokers in the market, we're better than you at doing what you've been asked to do. So we have to prove that. So we, all of our advisors that we've got are really heavily trained. We only bring on really experienced people, and they're individuals with personalities. We don't run a call centre type environment at all. But even down to our tracking system, firms can log in and they can select which of our advisors they want us to deal with their clients, because some of our smaller introducers certainly want to tell their clients a name and they want to work with our advisors that they've maybe known for a period of time. All our advisors are fantastic, but they are all different. So there might be some that are better suited to a business protection product or a private medical product. So it gives them the ability for them to decide where they want their client to go.
You've almost got specialists within specialists. You've got protection specialists who know all the ins and outs, but even within that, you've got people in your team who are actually very good at certain elements of that journey.
Correct. Everybody's different, aren't they? And everybody's got a different skill set, and it's down to us to recognise that and ensure that they're the best in that field. So we have people that are really, really heavily trained on business protection and understand that fully. We have other people that really are experts on income protection and other different types of business protection, such as your relevant life covers, your executive income protections, things like that. They need to have a full understanding of, so it gives them the ability to do that.
And I guess that's where it's potentially hard for, maybe mortgage or wealth advisors, because when you do look at those more specialist business protection areas, they don't come up every day. Like, I guess your mortgage cover, you can, you're looking at a debt amount and you're matching it up. But when you do look at those more specialist protection areas, you might get one every, 5-6 months, depending on your client bank. So I guess that is hard to then keep up to date with the knowledge. Back to consumer duty again, it's like, how can you make sure you're living up to that standard?
It's very tough to do, I think, as a mortgage broker. You're having to deal with, or if as an IFA, you're having to deal with so many different elements of this. It's very hard to be an expert. Insurers are changing their terms all the time. They're changing their medical questionnaires. They're changing their products. To fully understand each and every insurer, of which we have over 20 on our panel, is very, very difficult to do. So we have to do extensive CPD with all of our advisors, and we have insurers coming on every week to go through any changes that might have happened there. As a broker on the other side, unbelievably difficult to do, almost impossible really. We do have technology tools out there in the market which certainly help, such as Protection Guru and CI Expert, that are very, very good. However, you still need to have the time to read that information, digest it, take it in and advise on it. And again, we keep going back to time. This is what this is all about, really. I think most mortgage brokers want to do the right thing, and if they had more hours in the day, they would advise on everything holistically. But there's less and less time for them to be able to do that, especially when you have weeks like last week where you've got rates being pulled at 5 o'clock and they're there trying to get applications in. It must be very difficult for them and very difficult for their clients.
Yeah, I absolutely appreciate when at the moment, especially when any mortgage advisors either choose to listen to this or, come to any of the events that we run, you do appreciate their time, because it is a difficult market at the moment. But what would you say, so you said time's sometimes a barrier. With consumer duty though, what do you think the risks are of the firms that don't address this, or any advisors who don't take any action off the back of consumer duty?
Yeah, so there's risks for everybody in there, and the biggest risk is with a client, isn't it? It's not like this hasn't gone on before. We've had lots and lots of clients have been let down, and there are claims out there which you can look back, and there was one prominent one that started me in, I think it was in 2018, I think it was, where a lady had gone into a mortgage brokerage estate agent firm for specifically advice on protection, and she'd given a few details to the advisor, and the advisor had said, look, unfortunately, we're not going to be able to cover you. Lady wasn't too happy about it, placed a complaint with the firm, and they said, again, we still can't do anything about it. Ended up going through to FOS, and the complaint was upheld because the firm couldn't demonstrate that they had done pre-sales on all the insurers on their panel. So in that situation there, the lady didn't necessarily lose anything, but that firm has then had their reputation tarnished and a FOS fee. And we all know that claims management firms are watching consumer duty very, very carefully, and they are circling. They've been gathering data for years. I know that firsthand. So don't be surprised if you don't change your process and do things correctly, that it will come into the industry within the next 24 months, I think.
That's a cultural piece for firms to sort of wrestle with, isn't it, in terms of doing the right thing every time, whether it's an initial inquiry through to post-sale.
Yeah, it is. And I think that it's probably easier, that is, to communicate when firms are in a network, because the network can make the rules, because ultimately the network are as fully responsible as the firm are. It's a little bit more difficult, I think, in directly authorised world, although a lot of them work with compliance teams. Maybe consumer duty isn't going to resonate as heavily with some of those. So I think it's for the whole industry needs to take note, really. And all this is about it's about doing the right thing by the client, isn't it? And if we don't do the job as we're set out to do, you're putting your client at risk.
I guess it's about doing the right thing from your client, but I always say to advisors it's protecting their income too. Because if that client loses their income and loses the ability to earn again, then actually so does your ability to do the remortgage, the product transfer, or the wealth and pension. You know, assets under management are then at risk if that person's income isn't always there. So yes, it's about doing the right thing by your client, but also your own business, surely, as well.
Yeah, it is, absolutely. And we've sometimes taken on firms in the past where maybe they are just advising on life only because they say, well, I'll just protect the mortgage and I don't really know much about the rest of it. And obviously they are smaller case sizes. So some of those have been earning £500 or £600 a case. But for them, referring their clients to us to do things holistically, the case sizes for us jump up. And yes, they are getting a portion of that commission from us, but that has been in excess to what they've been earning before. And the client's getting the full products and fully advised, putting everybody in a more secure position, including the firm and the network.
So do most of your advisors then sell more than one product on average?
Yeah, pretty much every piece of advice we do is multi-sale. I mean, every advice piece covers everything that is applicable to the client. But I think when you explain these products to a client, so if you never explain family income benefit to a client, then they're never going to buy it, are they? It's about putting them in an informed position. And what we do going forward with all of our clients as well, they receive a protection guide. And that was written by Emma Thompson, who works in SBG. So they receive this guide at the start of the process so they can look through the products. And that will, in turn, raise questions from clients to their advisors. So I think mandating something like that is very important because it can't be missed as easily.
And when you brought that in, did you see a step change in the amount of customers that would buy and keep those products, understanding all that type of thing?
So for us, Wayne, we've always done that. We've always gone through those products, but in a different way. I think that for the wider industry in the mortgage market, in putting more information up there up front will mean that more products will be sold, which in turn helps that advice firm with their income as well.
Yeah, and I guess it's one of those where you say every time nobody wakes up wanting it. So the more you can preempt, plant the seed and get customers on board, the easier it is for all of us to work together and grow in that industry, isn't it? In terms of training and development, I'd like to touch upon that a little bit. So again, from an advisor point of view, if they're listening to this and thinking, well, I need my client to be looked after, are there certain kind of values or skill sets that you look for when you're building your team? And then how do you grow that team to be the best they can to help those clients?
Yes, the most important thing for us, and it's quite simple really, we want to bring on advisors that do the right thing by clients first and foremost. There are advisors out there maybe in the past would have looked at rebroking a deal that's going to be for their benefit rather than the client. You need to be in a position where you're doing the right thing and you're prepared to walk away from business if it's not the right thing for the client. Less of that goes on now, I believe, but it still does go on. So you've got to be really ethical. You've got to really put the client's interests at heart and ensure that you're getting as much information from them as early as possible to match these products if things go wrong. And we've all seen things do go wrong, and it's good to have that policy in your drawer if something happens to fall back on and help yourself or your family.
In terms of the brand of your organisation, what sort of mechanisms have you got in place, documentation? I know you mentioned the Emma Thompson thing that you use. What have you got in place to ensure that brand's top of mind, particularly when it comes to claim time, for example, to ensure they come to you first?
Yeah, so that's really with clients we're talking about there. That is mainly from the review work that we're doing each and every year. So that there is new technology we're bringing on board to feed related industry content to those clients throughout the year, not bombarding them with things that aren't important, but just to keep more regular contact, because we still feel a year is still probably a little bit too long. But that will certainly help.
I think with the advent of AI and all that type of thing, there's a real opportunity, isn't there, to do something there. And it can be personalised as well, can't it? Because the technology is so clever.
Yeah, I mean, AI is fantastic, and I think it's certainly going to help advisors. I still don't think we're going to get a good robo-advice model in the next 3 or 4 years. We need people. We need people that have got a heart, really, to be able to do this job. But AI will certainly help, and I think there'll be systems in there to help boxes be ticked maybe for some firms and networks that might not be the right thing.
I think the holy grail, isn't it, is we mentioned it, time, freeing that time up. If something could come along to free the advisor's time up, particularly your mortgage advisors, the situations they've had recently, we had something that could come along, could do that for them, they could really focus on it.
Yeah, and I think there will be a lot with sourcing systems. They do get better and better. Yeah. It gets easier and easier. But say like within SPG, where there's a mandation of protection advice going on, all the firms have got choices, haven't they? They can do it themselves, or they can refer it on to a partner such as us. That third option of simply doing nothing should never have been there. And I think Consumer Duty will just highlight that now to say, yeah, it's just not good enough. We're not doing the right thing by our clients.
Yeah, I completely agree, because that thing about not doing anything, that's the most frustrating bit of all, isn't it? Because it's not fair on the consumer that they don't know what they don't know, and we're not giving them that opportunity to learn about it and mitigate the risks, really. And I think it's interesting when we talk about, talk about that AI, and I think the thing for me, the biggest thing in protection is making it personable, because otherwise that person is going to walk away and potentially cancel, or not really, if their finances do get stretched, they will let it drop if it's not being personalised. So how personal do you like to take your conversations, or your team take the conversations? And then also leading on to retention, how do you keep your retention figures really strong? Because I think you won a recent award for that from us, didn't you?
We did, yeah, which was fantastic. But I think, again, it's going back to the reviews that you're doing and ensuring that clients are fully aware of what they've bought. But I wouldn't sit here and say that no two cases of ours aren't the same, because some people's advice does require to be the same. And you've got to go with some sort of blanket approach, which we do now of looking at everything. But we have massive variances in insurers and in products. And it's like for family income benefit, for example, one family might see that their children are dependent at 18, some might be 21, some could be 30. It's about having that strong fact-find conversation with your client to understand their beliefs, really, because that's what's important. We need to be matching advice to their objectives.
I think that's funny with the family income benefit, because I don't have kids and I have it. So I find, because if I could pass away and my death in service, my life cover will pay out, but James would still be left with all the bills and everything else to pay. So it's funny, that one, isn't it? Because we always draw family income benefit to be for family, but actually it's a household benefit, really, isn't it?
You're very right, and it isn't prominent enough in the industry about why that product is there, because it is an income replacement, isn't it? Income protection is for a different fact there. If somebody passes away or gets critically ill, having that income to support up until retirement is magic, isn't it? Imagine being in a position where you're just going through absolute hell. Your life's never going to be the same again, but do you know what? I can get myself back on my feet because I'm never going to have to work again. It's very different where you see scenarios, and we've seen scenarios of people where they lose a loved one and they're forced to go back to work after 3 or 4 weeks. It's horrendous and it's wrong, and we don't have enough support or the funds in our economy, in our country to support people more.
It's interesting, just we're going off looking a bit at family income benefit, but whilst we're talking about it, there are still advisors out there who don't fully understand what that is, as we've just said. But the thing I find interesting is people assume it's so much more expensive than it is as well. To add it on, I don't know, your opinion, you probably see a lot more cases than I do going out and about, but what's your opinion on that?
Yeah, unless you're adding critical illness, it is really, really low cost. And I think on average, maybe our family income benefit premium on life only is about sort of £12 to £14 a month. When you look at a pint of beer is now, £6? Down here in London, maybe more like £7. That's just 2 of those, isn't it? I'd rather go without the beer and have my family protected, I think.
That says a lot.
You've said that a few times.
Yeah, definitely.
Absolutely great stuff. Yeah, so in terms of the process of referring, Dale, could you sort of give us a bit of a whistle-stop tour of the things that work with regards to that relationship?
So it's very, very easy, Wayne. We have a business development team that will make contact with the firm, set them up with introductory agreements, which shows the commission amounts they're going to earn. After that, it's setting them up on a system where they can literally click a button to refer. There's very, very little detail on our Stonebridge side, certainly. It's one click of a button and the client is across with us. Once a client lands with us, we have a 2-hour SLA to make contact with that client. And it's not like we can't get hold of the client and we won't call them again for another 4 or 5 days. We don't hound clients, but we understand that with protection, it does need to be more active contact points than the mortgages, for example. So we will use emails, we use texts and phone calls. I think on average it's about 8 contact points that we have with the client to get them through fact finds, the advice being delivered. But we have patience with the clients and we give them time as well. So, and quite often the initial appointment will be maybe 30, 40 minutes of fact find, and then we'll book a presentation going forward from there for our solution and applications.
And how important is it to be really close to those people that are referring their customers to you?
Really important to us, because we want them to see that we're doing a good job for their clients and doing the right thing. And I think it's very important for the mortgage brokers as well to ensure that they're using a partner that someone like us that has a no cross-selling agreement within there, so that they know if there's any other queries on any of the financial products, they're going to get referred back to them as the mortgage broker. What you don't want to do is organise a mortgage for somebody and tell them to go online to compare the market and pick their protection. Lo and behold, 3 months later, they're going to get hit by those same aggregators for mortgage products and other things as well. With us, it's secure, clients are looked after, and we get good outcomes for all.
And then you get trust, don't you, from those relationships that you built up.
Yeah, it's the biggest thing, Wayne, really. I think that unless you have trust there, then none of it works. It all falls down.
Have you had any new people into the sort of referring industry process over the last 6 to 8 months at all? People that are just dipping their toe in, thinking, right, okay, Consumer Duty's coming along, or we just want to make sure we focus on it properly. Anyone new come along?
We've had a lot. We've had a lot of partners as well that still will continue to do some of the protection themselves, but maybe they will use this for overflow when their time doesn't allow, or it might be for complex cases. So we have access to, obviously, a lot of friendly societies and other insurers that some panels in the UK don't have. So that gives them the ability to still place that client.
Well, that's the thing, because I guess if you've then got an advisor who thinks, right, this is complex, I don't have that ability, that doesn't mean there's not an option for that customer on the market somewhere.
Correct.
And I guess that's where people like yourselves can come in and really, take a hold of that customer, handhold them through the journey, but advisors still retaining that client for themselves. And from a client point of view, I guess that's a brilliant service, isn't it? Because they're getting absolutely the best of every part of their financial journey.
They are. I think when a client has gone through a broker and they've been unable to place it, and then they come through to us, they've got a far greater chance of being able to get cover in that market than they're not doing it. Say a lot of people maybe single-tied in the past, and they just try and use one insurer for simplicity. But it might be great for that firm and simple for the firm, but it's not the best outcome for the client. I think that using a service like us on the back end of whether they're doing single tie or even a small panel, it makes sense to have us on board.
Gives that confidence, doesn't it? Firstly to the client, but also to the referral partner who's referring to you, because you're an expert, you know what you're doing, you can source from a wealth of different types of provider, different types of client, different types of case.
Yeah, and we used to, because for us, it's protection is all we do, so we're used to those particularly difficult cases. And a mortgage broker could have a case sat on their desk for a week, speaking to different pre-sales, using lots and lots of different time, where with our experience, we can look at it and say, right, I know this insurer will potentially look at it and this insurer will. And it cuts down that time for everybody. So expertise and knowledge means that we can get to an outcome a lot quicker than others.
What I'm hearing from everything we've spoken about then is it's about putting the clients first, having an expert, team full of expertise, but also the advisors teeing this up in a way that the clients are going to be receptive to when your team phone. What would be your one piece of kind of key advice that you would give any advisor on the market just now when it comes to protection?
I think the most important thing in tying in with the Consumer Duty is to have that word of holistic. It's ensure that if you've got a mortgage and protection license, you're offering all protection products and quoting all of them. As we said earlier, mortgage protection for most families and most individuals, quite often it isn't enough. So ensure that you are offering everything that you possibly can. And if you cannot place the case yourself, look at outsourcing it to an organisation such as ourselves, which might be able to go a little extra further mile and get the client the outcome that they need.
Yeah, absolutely. Well, we've dealt with a lot in this episode. We've had builders outside, we've had offices, phones going off and everything. So thank you so much
Whose
for
phone
your
was that,
time,
Hazel?
Dale. It was maybe mine. But yeah, thank you so much for your time. We really appreciate it.
So much, Dale.
Yeah, it was great.
Thank
Thank
you.
you.